John Seville is the CEO and founder of Acorn Wealth Corporation. Now, Acorn Wealth Corporation is one of the leading stock trading academies in North America, and they have over the last 7 years worked with thousands of investors to help educate, train, and mentor individuals on how to effectively manage their own money. Now, John, along with his team, have spent the last 11 years mastering the art of technical analysis as a method of finding trading opportunities in the North American equity markets, using some very unique techniques. Now, using such techniques, John and the other senior traders at Acorn Wealth were able to identify exit points on the market prior to a major breakdown, such as that in 2008 and in the months preceding the European Union crisis. Now, without any delay, let me bring up John Seville from Acorn Wealth. John, you can go ahead and take it away.
Well, thank you so much, mate, and thanks for everyone for being here and for having us on today. This is one of my absolute favorite topics to discuss, which is really the specialty and the niche of our business and has been for the last 7 years, which is scanning and finding opportunities. Because it's my belief that trading is all about being efficient and trying to run your portfolio much like you'd run a business, and of course efficiency is one of the key things. Of course, the standard disclaimer that's up on any presentation. We may be talking about some real stocks here tonight, so just a reminder, it's not a recommendation to buy or sell. You have to make those decisions yourself. But let's get right into it, because we've only got the 45-minute window here, and I've got a lot to cover with you. Basically, the main reason why we believe so strongly in scanning and so strongly in having, well, a strategy, I suppose, is that most people don't. Most people receive their ideas from many different sources, from news, from newsletters, from brokers, from TV shows, and that's fine. But what do we do with these ideas once we get them? How do we change the way that we create a way that we process ideas in a consistent manner? How do we through a process-driven approach, quantify those ideas to see if they meet the shopping list that we're looking for? And do you have a shopping list? You know, so when you go out to look for a stock, you know, exactly what are you looking for? And you know, I think that most people don't have that, so it's no wonder why they have inconsistent results, because they're not able to replicate the winners and avoid the losers because they're not keeping the variables the same. And that's what I want to start kind of approaching today, is this topic. So as we start to think about what a shopping list is, or what the recipe for a scan would be, let's talk about basically the ingredients or the makeup that go into a scan. So if we were to sit down today and say, all right, let's create an idea that instead of going through 8,000 stocks at the end of today's market, let's create an idea and develop a scan on the fly that will find those opportunities for us. So let's say that the idea that we want to start approaching the market with is that the market was falsely strong, or is falsely strong, and may have rallied today, but we think some stocks are at the beginning of their downward descent. Well, the next thing we then need to do is we need to take that idea and we need to start to say, okay, well, what kind of conditions would make that stronger? It's not much like a doctor diagnoses a patient. Somebody who's going to be susceptible to certain diseases might be people with pre-existing conditions. So we're thinking, okay, if we're going to find a tradable opportunity, what pre-existing conditions do we want the stock to have that might make it even weaker? So we might then build into the scan that we want a weak sector. We might want to then see that it has a high P to E ratio. So in other words, there's a lot of speculative value built into the stock. But if there's so much speculative value into the stock, surely it's a strong company, and surely we wouldn't see institutional selling, insider selling, along with a higher price-to-book ratio also. And if we did, that could mean trouble also. So let's build these conditions in. Now, this is the kind of research that a fundamentalist would do. It's not the kind of research I do. I prefer to just focus on the technicals. But for this reason, because once you've done all this fundamental research and you found this weak stock in a weak sector with a high P to E ratio, these could have been the same conditions while the stock goes from 50 to 70. And then maybe even all the way up to 80. These conditions can exist for a while until the stock finally breaks. So that's why fundamentals are very laborsome, because you could find the best fundamental pick, but it could be 6 months until the timing is actually right to trade it. And so this is where we start to get into where I prefer to work in, which is triggers. So we start to use timing mechanisms to then support when we actually want to get in and out of that idea. So let's say that the market went up 2%. We could search for stocks that in fact went against the grain and went down, and at the same time as going down against the grain, they broke support, whether that's horizontal or trend line. They broke a support level. And then what we can then do from there is then we can support that idea. Now that we know the type of trade we're trying to create, now we can say, all right, well, as the stock broke support, we want to see a big increase in volume to show that the smart money is really behind this. It's not a fake out. The volume's going in. The MACD is negative. We've seen a downtrend. The ADX, which measures the amount of movement in a stock system, is above 25 to show us that it's not simply oscillating and consolidating. There's actually movement in the system. And this type of idea is something that you can actually build out very, very quickly using tools that are available free online. So I'll just give you an example. We'll bring up, I'll bring up FinViz here. So this is something that, this is a process that we went through. I'll show you the process that we had gone through to actually find a over a 1,300% return just 2 weeks ago. If you go and have a look at the, let's go through this process here together. So let's go back to ideas. We want to be looking for the market's falsely strong, which we believed was true. We believed that so we're looking for a weak sector, high P/E ratios, insider selling. So the process of how you could have put into a scan, and I'll just go through this very quickly. You're going to have to give me a moment here while that restarts. So the first thing that we were looking back at was the if you remember, the S&P was topping out in a complex head and shoulders pattern a couple of weeks ago as we went into the beginning of August. So this was something where when you see a head and shoulders pattern, immediately you're going to be looking for breakdown stocks or double tops for the head and shoulders within the market. And so this led us to believe that these little rallies that we had, and it'll be popping up just on screen here, my program is conveniently that it needs to restart. But when you see a head and shoulders, you're going to think about, well, what are the types of ideal patterns you're going to look for? Head and shoulders, double tops, rising wedges, descending triangles, anything where basically you've got a previous bullish movement moving into bearish sentiment.
Hello, Johnny.
We can.
Did it go out on you? Yeah. Hello, Johnny, you there?
Yes, you got me still?
Yes, we went about 10-15 seconds without any audio right there.
I apologize. Okay. What I was going to say here is that once we've actually gone through the step-by-step process of putting a strategy together, the idea is to collect a tool set almost of several strategies that you can go to in any type of market condition. So I heard the previous speaker was talking about the oscillating markets during the summer versus the trending or momentum markets on the tail ends of the year. This is absolutely true. So when you're looking at the market, we need to know what types of strategies work best in oscillating, what work best in momentum. So we developed this checklist that we can actually go to implement on any day, on any week, on any month, to go through this decision tree to get to the ideal, most profitable trade. So the first thing we want to ask when we go to decide what scan to run, and I'm going to be, by the way, giving you some scans tonight and showing you some examples of trades that have just come out of them. But the first question we want to ask is, or what people ask is the market bullish or bearish? Now I have a real problem with this question because it's got everything to do with emotion and subjectiveness, whereas as a trader I don't want to have to think at all. I should be following my rules. So I shouldn't be having to listen to the economists so much as I want to be listening to what the price action is doing. So rather than ask subjective questions, I want to ask not is the market bullish or bearish, but are we at resistance or support? And as we approach that resistance or support, what are the sectors doing? So which sector is at resistance or support? And then what we want to do is, most importantly here, is actually find out as well, is there momentum or resistance? Momentum or a lack of momentum, sorry. So if we're actually going up and the S&P is rallying into a resistance area, we know the market is at resistance. The next question is, do we have momentum or a lack of momentum? And if momentum is building beneath the index, then we're going to be looking for bullish breakout stocks. But if we see that as the market rallies into resistance, the actual momentum is dropping, then on that same exact looking chart, instead of going bullish, we'd actually be looking for reversals, double tops, head and shoulders, etc. And then what we can go through is we can run the correlating scan to find the best stocks based on where we know the market's at. So as I promised you, I'd go through one example of this before we get into some of the live scans. Here's how this would have played out for you the last couple of weeks. Let's go to the, here we go, the presentation. We'll go to the S&P 500. And if we have a look at how the S&P 500's acted, we can actually go through and draw, if we draw trend lines properly, where we're going left to right, and we're connecting the peaks, and we can almost just auto-extend that, you'll see that for the longest time, the market was oscillating. It was going back and forth, back and forth, back and forth, until the 22nd of May. And on the 22nd of May, what actually happened is the market started breaking higher, started turning into momentum. And I'll just show this to you on the screen here. You'll see that these moving averages, the 9 and 20, stopped cutting through the S&P 500 and started supporting it right around this point here, 22nd of May. Now I mentioned that we asked the question, are we at resistance or support? Well, what happened, as you can see as we bounced along here, is as we crept into this line, we were then at resistance. So we have two choices here. One choice is because we're at resistance to search for shorting opportunities. It's an ideal time to short if you're at resistance. However, if we're actually in a breakout mode or momentum mode, this would be a terrible time to do that because this is when markets break resistance, and in which case you'd want to be going long. So your ability to know which scan to run is very important right now between a profit and a loss. And where you'd look for example here, is you look at the momentum signified by money flow at the bottom of the chart. And the money flow is showing you a combination of, is the stock breaking new highs, is it doing it with new volume, and is it actually being able to break new highs and close at the top of its range? That's what money flow analyzes. So if the smart money is really buying and the market has momentum, this should be going up. So as you went through this checklist, going into June, you would have seen that the market was not making really new highs at all, but there was a huge amount of extra money flowing into the S&P. And this would have told you to run breakout scans, momentum scans. On the flip side, if we want to go across to the right, you'll see that the opposite was occurring. As we came down and approached key support on the 31st of July, again we ask ourselves, do we have momentum or do we have a lack of momentum? In this case, we had an extremely bearish signal, whereas the market went higher, momentum was flooding out the back door. And this allowed you to search for bearish stocks. Combined with that, talking about profitable trades and patterns, you then look at the way that the S&P was setting up. And what pattern do you notice? What pattern do you notice right here? Let's take that away for a second. What pattern do you notice right there? That's what we call a complex head and shoulders pattern. Left shoulder, second left shoulder, head, right shoulder, second right shoulder. And for those of you who follow our YouTube channel, we published a video on the Tuesday, July 29th, and we said within the next 2 to 3 days we expect the market to drop 40 points. And 2 days later it dropped 39 points. So it was a combination of this analysis that allows you to then make that kind of designation. So go back to our checklist. What do we then do? We search for a weak sector. And for anyone who'd been following the Dow Jones transports, this is something you would want to do on a weekly basis, is look at all the different sectors. And if you look at the Dow Jones transport, again, by not asking what's bullish or bearish, but simply what's at resistance and what's support. And if we draw our trend line again properly on the Dow Jones transport, it was very, very easy to see that we had broken a key level of support on the Dow Jones transports on that very same day. And then again, if we ask where's the momentum, where's the smart money going, massive drop. So then now you have your idea. The market is falsely strong. The market has lost momentum. We search for a weak sector being the Dow Jones transports or railroads. And then all you would need to do is then go into something like FinViz and build this out. So you go into Screener and you'd say industry, railroads. And quite easily, when you're doing something as small as a railroad, you can then just eyeball this and look at your anything in red is considered a high P/E ratio. So there's your additional factor there. And then you can simply click on charts, and you can actually then look at those charts accordingly. And based on just visual analysis, CSX as well as NSC, Norfolk Southern Company, were two that jumped out that had also negative insider action also. So then now you then take CSX, you throw it up on your chart, and you do the same process. What do we have? We have a system where the stock was actually rising in a rising wedge formation. So the stock is making new highs and new lows, but contracting in its range, which is a bearish signal, meaning it should drop next. So we have a bearish pattern, a bearish sector, a bearish market, and it's already in fact broken support as well within its own bearish pattern. And then we look at the smart money. What's the smart money doing? Massive divergence. So this was one where we picked the what was it, the August $90 options? August $30 puts. And since we just in 3 days, from Tuesday through till Thursday, or Monday through till Thursday, I believe it was, those options went up 1,300%. So just to give you an idea, I mean, that was an easy pick. It took us about 15 minutes from start through finish. It was actually one that we actually did in our last workshop live in front of a group such as yourself, for any of those of you who were in that. So that's the process of scanning. You can find big potential returns to a very process-driven way. So of course, again, you can see these final points I've talked about. Is the stock approaching smart money support or resistance? Is the move confirmed using the price action and patterns? And is there special ingredients? Now we're going to come back later to many more kind of live positions, depending on just how much time we have. But I wanted to give you actually a couple of more some actual stuff you can take away and actually use, because once you have a couple of scans and you know what you're looking for, it's very, very easy to start doing better. Now we've already talked about the idea of is the market bullish or bearish. I won't go over that again. The more important question, of course, we're going to ask is, are we at support or resistance? Then we look at the patterns. And here, so if we're at resistance, if the market is oscillating, if we're at resistance, we can look for double tops. We can look for double bottoms. We can look for head and shoulders, reverse head and shoulders. Every chart's going to have a different probability. So there's about anywhere between 60 to 100 recognized charting patterns out there. Each of them has a different probability, a different level of profitability, and each of them will be, some will be easier to find than others, which I call predictability, or the 3 Ps. So understanding that every different chart is like a different recipe is important, because while I'm throwing all of this information out there to you and talking about all these different ideas you could have, to be consistently successful, what you need to develop is just a few. So I said at the beginning, you want to have a toolkit. So if the market is at support and momentum is dropping, you're going to be looking for bullish stocks at support. At resistance, you're going to be looking for either bearish stocks for reversals or breakout stocks, such as flags and so forth. So here's a couple of examples. So in upwards momentum markets, we've got falling wedges. In falsely bullish markets, you've got rising wedges, like the ones I just showed you. In bullish markets with momentum, flags are an incredible way to play those. Saucer patterns, also an incredible pattern for momentum markets, where you just get these big, long runs. If you want to think about Chipotle Mexican Grill, that was a great example of that. And if you actually want to go back and look at when that big run started, it was on the 22nd of May, just like I was talking about earlier. That was when it broke its resistance, and that was when the smart money also started accumulating right there. CMG, an example of one of those. So the trick is to pick one for each kind of style of market. So I trade, I trade fallen angels for momentum markets, where I'm looking for a stock to have plummeted and be turning around and starting to run. I trade also secondary entry like cup and handles. So cup and handles or bump and run formations are also what I trade. In terms of oscillating markets, double tops are my favorites. You can also trade channels. I'm not a big fan of those. Double tops are more what I like to work with, or the extremes where there's been massive moves in either direction. Head and shoulders. But my absolute favorite, one of my favorite patterns, pennants are okay, but my absolute favorite for bullish momentum markets is flags, and it's because of how quickly they move. And we'll talk more about that in a moment. Now, once you've got the pattern, Once you've run your scan and then you've confirmed with your pattern, then you want to be looking at the time frames. So if you're day trading, look at an hourly, 15-minute, and 5-minute. If you're swing trading, then you want to start with your daily, then have a look at your hourly and even your weekly on either side. So you always want to look at extra patterns, because if you can get a bearish pattern on all 3 time frames, then you've got a huge, much greater profit potential. And then the final step, as I mentioned, only then when you've gone through all this can you then look at indicators, because indicators are simply an answer to a question. And if you don't know what question you're asking, how do you know what answer you're looking for? So if you're a momentum trader using RSI, then you want the RSI probably to be up above 30 when it starts and bouncing between 50 and 70 as it plugs along. If you're an oscillating trader, you wouldn't touch a stock that was anywhere close to that. You'd be wanting the RSI to be as low as possible, as close to 0 as possible when you bought it. And if you were an oscillating trader, you wouldn't even look at moving averages because they're useless. You'd be looking at oscillating indicators. So you've got to know what recipe you're trying to cook so that you know whether you're even using the right indicators in the first place, not let alone what values you're looking for. So some of the most common ones, Bollinger Bands, obviously. If you're a momentum trader, trading momentum markets, you're probably looking for the Bollinger Bands to squeeze. And you're looking for the stock to hug the Bollinger Band before a big move. If you're an oscillating trader, it's quite the opposite. As an oscillating trader, you don't care what happens inside the Bollinger Bands. You're waiting for the stock to go outside the Bollinger Bands, such as here, to buy or short at these extreme levels. CCI, another example of an oscillating indicator. RSI, again, I talked about that already. All used differently depending on the pattern that you're wanting to trade. So let's now give you some scans that you can start using these ideas on. And I tried to spend a lot of time, maybe too much time, talking about, you know, how to actually build the foundation of this stuff, because without an understanding of why something works and without an understanding of the thought process that's gone into a product, I find it's difficult to appreciate. And I'm not a big fan for understanding all the whiz-bang terms like flying tops and spinning dojis and hangmans, and I appreciate the terminology, because you want to know the terminology to, you know, the things that you deal with on a daily basis. But what's more important is understanding why they're bullish or why they're bearish and why a pattern works or a scan. So let's talk about, firstly, a short float scan. This is a fairly simple one. So let's say that you've got a bearish market where momentum is starting to come back in. This is a kind of very contrarian fun scan because it's very anti what everyone else is thinking, which is how I like to trade. I like to do the absolute opposite of what everyone else is talking about. When they were saying Apple was going to go to 1,000, we shorted it at 680. When they said that gold was going to new heights back in January 2 years ago, we played the short side. So, I mean, we're very contrarian. And this is one contrarian scan. So if you've got a stock that's heavily shorted, and this is what the idea of this scan is, what has to happen for all of those investors to take profit? They have to cover. They have to buy. Because if they're shorting the stock, it means that they are betting against it, selling stock they don't own, and have to buy that stock back. So as the stock drops, where are they going to have to buy it back? Probably at some kind of smart money support level, where the big boys are going to step in and say, right, this is the price where we're programmed to buy at. So what we want to do is we want to find a company that's heavily shorted, that has insider buying and institutional buying, so that there is actual, as the stock plummets, the smart money is actually getting into its own positions. And we want to then look for technical patterns that indicate where that sudden buying could happen, where the light could go green and all of a sudden stock's being bought up, causes a short squeeze and a dramatic rally. So again, let's go over to FinViz and build that out. So what we can go is we go into the screener. I'll just reset this. Oops. And go into the screener, and I'm going to flesh this idea out for us. So let's go to all. So I'm looking within here. It's a free application. I'm going to be looking for a float short over 25%. Institutional transactions, negative. Insider transactions, negative. So you can actually see that there's 17 companies that come up in that scan. And what I can do is I can then go in and just click on charts. And now what I want to be doing is I want to be eyeballing this. And I can probably get a little bit more detail just by clicking on basics. Now my job is to actually just go through and eyeball these 17 companies. And what I'm looking for is when a stock is hitting is in a high probability bullish scan. Pattern. Because when the stock reaches that buy point, that's going to be when short covering suddenly starts to happen. So we could actually potentially already have this around on an HLF. You can see that we've got this, when I talk about smart money, you can look at this dramatic, massive drop that turned into an instantaneous rally, pulled back, massive drop, instantaneous rally, massive drop, instantaneous rally. So this is only explained, in my opinion, by high-frequency trading, buying when support's hit. And we possibly could be at this level already. We'd have to see if that's already been broken or not. The channel has. But HLF would be then I would write down on my watch list. I'd go and analyze it, look at what else is going on with it. I can see we're actually not all in the US here. We're at 15 stocks. Okay. So as we go down, this is where technical analysis skills kick in. So you can see we're going to be looking now for the most bullish pattern or strongest support level that you can find. That you can see it's already occurred as probably on SUNE. Big rally up there to 22. But this is the kind of process with a short float scan that you're looking for. Zillow. You're looking for stock to very bet against, and what you're waiting for is extremely strong supports. None of these really look that impressive. This is probably the strongest support level you can see here is Zillow, because you can see this dramatic rally that happened from here to here, from 130 to 160. But in the property matter, it's not a great. But nevertheless, this is where you're going to approach short float rallies. Okay, let me take you to the next one. The next one's a bit more fun. The next one is options during earnings. So for anyone who likes to play options, now you can play the stocks on this too, but we generally advise that we don't like to hold stock and typically avoid it at all costs into an earnings announcement, because you can't control the risk, whereas with an option you can. So this is how the option strategy works, or what the option scan. What we're looking for in options during earnings is insider buying to be negative, institutional buying to be negative. We want them to report earnings within the next 5 days, so that we can obviously pay because we want to get into the option almost the day before it announced, unless it's already starting to break down, because we don't want to pay any premium at all. right? So the idea is we're going to be looking for something that we can benefit from the surprise break up down very quickly. So ideally we're looking to buy the option, the put, as the stock rallies into its perfect resistance point just before it announces. So if you go over to this again, we've already got negative, short float. That's not our trigger. The short float is not our trigger anymore. Earning date, 5 days. So you can see we've got negative institutional, net insiders with an earnings date in the next 5 days. Now our job, once more, is to now or bearish patterns. So we're coming up on options expiration week this week. So this is where you can sometimes get the juice. So you can you can buy options that are out of the money, cost you 5 or 10 cents because they expire in 2 or 3 days, and it has its earnings and gaps down $2, and all of a sudden your options are worth $2.05. Well, there's where you get a 2,000% return, isn't it? Yeah. So these are the kind of things that we look for, is these types of weeks or opportunities or on weekly expirations. So we can see here that we've got, just going to eyeball, see if we can find anything that jumps out to us. Possible down channel here on Briggs and Stratton. You can see that trend line that kind of pops out there. So I put BGG down as one to check out. We've got a consolidation pattern here, possible head and shoulders. Bolt, hard to bet against oil and gas though, but nevertheless I'd jot it down. Remember, we're just doing our scan here to pick out the ones we may be interested in. We've got CEP, also oil and gas. Doesn't look like there's going to be much volume on that. You can see that this is very choppy, so I would assume that the volume is fairly low. Got here. So we've got GK, personal services. That's been a bearish sector on August 14th before market. So we've got a couple of days to see that one rally up a little bit. That's the kind of perfect thing. If that was up at $52, I'd be buying puts on it. So there's an example of the process. So if you want to see, now you can go through this yourself. I'll show you a couple that came up in the scan. We actually last ran this workshop. This was also picks from our trading room. This was Ameris was one that we found. Again, it was a bearish. Earnings were coming out, momentum dropping, and those options on American Express were up 1,200% in just a few days. Found with the option scan. If you want to look at another one, it's IBM. IBM was actually one originally found that way. If you look at IBM, it's in a beautiful head and shoulders. And as it went into resistance, into its headline resistance, it broke. Momentum had been dropping right away. Even as the stock was going up, the momentum, smart money was getting out. If you look at the insider traders, you'll see that all of the insiders were selling. CEO, CFO, senior VP, secondary senior VP, just flooding of insider selling. And we're looking at the October puts on that one, I think down at 170, which which were about 30 cents, I think, when we first found them. I think they're up well over $1 now. I'd have to check that though, but I mean, it is a big move where you can be capitalizing on, triple-digit to sometimes two-digit returns. Now, we don't have a ton of time left. I'm trying to put a lot into today's session, just so you can really kind of see the power of these scans. Of course, as I've been showing you with some of these indicators, you then look at where the smart money is going, and things are starting to bounce around. I'm just going to finish up the slide deck quickly here, so that the questions we'll certainly go through those. But I mean, all of this, as you can see, it's about efficient. And I've been focusing on the details of the scan today to show you how it can find you very valuable ideas in a very short period of time if you know how to put it together. And you look at the 4-hour work week. It's about, are you working making 100 grand a year working 60 hours a week, or maybe wealthy 60 grand working 10 hours a week? And I would argue it's the latter. And with trading, it's the same thing. I mean, putting more time in doesn't always mean making more money. I don't think that there's obviously a certain amount of time you have to do to put in to build the foundation, to attend work like this, to learn. But this is where you take that is the most important thing. So as I said, I use 4 core strategies. I've shown you a couple today. I use the options one during earnings season only, but outside of earnings, there are 4 core strategies I use. Each take me a total of about 20 minutes a night to analyze the stocks. So the workshop that we're going to be coming up in next week, I believe, actually, is based on building on today. Today is 45 to a lot of information. The workshop we run next week is 2 hours long. So we go everything from understanding the difference between oscillating and momentum strategies, the indicators we use, and then we focus the majority of the time, about 2/3 of the time, going into scans. So one of my favorite scans I mentioned earlier is flags. Flags are one of the highest probability patterns out there. They work incredibly well through the summer. And basically what you're looking at is a scenario where we're looking for about a 3 to 5 day move of between 10 to sometimes as much as 30%. So they're great for option plays as well. And what we'll be covering is not just flags, but several strategies. The reason we're focusing on flags is because we are going into momentum markets, either to the or up, and flags are a great way to play it. They're ranked second on our list of 100 in terms of probability. Again, the trick is finding them, and that's what we'll be teaching in the workshop. So you'll be getting the scan of how to find them, as the other strategies we use. We go through a very step-by-step process to confirm them and track your strategy, and how to incorporate the smart money in there to confirm that the big boys are behind the move as well. So I feel we're now out of time. So if you do have any more questions or anything you'd like, certainly feel free to give us a call or drop us an email. But it should be great, and you will learn several core strategies that we use every single day that you'll be able to take away and start with.
Great. Thank you, John. Are you there, John?
Still here, yes.
Okay, great. Yeah, you just went out again. It might just be on our end, but you just went out there for a couple minutes. So go ahead and continue.
Oh, basically, with you, I see a couple of questions here. Are you looking for things to be in the beginning of the downtrend or further down? If we're going to be trading, basically, the answer to that question is the same. Buy resistance, sell support. If the stock is already broken down, then I will wait for it to rally back up and hit resistance to take the trade. But it doesn't, it means I missed the trade, but that's okay. My job isn't to make a trade. My job is to only take trades that meet my rules. You learn scans? Absolutely. You can see we put a lot into today. In this workshop, it's 2 hours long, so we don't have to rush it as much. And last time we stuck around for about 3 hours in total because people had questions, and we reviewed live markets and live stocks and things. So there's plenty of time to cover everything. You will learn the option scan, the flag scan, the conservative flag scan, short flag scan, and a couple of current event scans that are based on what we call open range. So there's a lot in there, and you'll certainly not be left hungry. I think we are out of time though, and if you, I guess this will be recorded. And so if there are 4 strategies taught in total across this workshop, and if you want to miss the live session, we do record it and send it out immediately afterwards. And as a member of the workshop, you can attend it at a future time if you do miss the live session. So we don't, so you have a chance to come and ask the live questions. And I'll pass it to Bill.